Poised for Exit is a show for business owners who want to achieve a successful exit based on their own terms. Your business exit will likely be the biggest financial transaction of your life, and for most, you'll have one shot at doing it right. The topics and guests we feature and the stories they share will provide valuable ideas and strategies to improve operations and grow enterprise value so you can achieve the best possible exit outcome. Now here's your host, award-winning certified exit planning advisor, Julie Keys.
Welcome, everyone, to the Poised for Exit podcast show. Today's guest is a specialist in sales and use tax who has helped many clients recover refunds as well as prepare for an upcoming exit. We're going to hear from him right after our show sponsors.
My name is Todd Crow, and I'm the president of the Twin Cities Exit Planning Chapter. If you're a business owner and advisor and want to learn more about the world of exit planning, you're invited to visit the Twin Cities chapter of the Exit Planning Institute. You can expect top-level education delivered by subject matter experts at every monthly meeting. Grow your network and draw from the learning that could be a game changer for your business or your practice. There's no pressure to become a member, so come and see what the buzz is all about. Our meetings are held the second Wednesday of the month, 7:30 to 9 a.m. See the show notes for more information and registration links.
Are you a business owner getting ready to transition? If so, I recommend True North Mergers and Acquisitions as your confidential strategic partner. They understand your business sale isn't just about one buyer and the price, but what you net that counts. In other words, what you get to keep. When you're ready for a higher level of representation that delivers consistent results, contact True North M&A to do the heavy lifting of selling your business. Learn more at tnma.com. That's tnma.com.
Exiting your business is a big deal, both financially and emotionally. I'm John Marquet, certified exit planning advisor with TrustPoint. We help business owners transition smoothly on their terms. Our focus is on maximizing value, minimizing stress, and giving you confidence in what's next. Whether you're selling or passing the torch, we make the process seamless. Start planning today at trustpointinc.com. That's trustpointinc.com.
For business owners, it can be overwhelming to start planning a transition or exit strategy, but it's so important to avoid unwanted outcomes and unexpected tax bills. The CPAs at JAK, John A. Knutson & Company, can guide you and help make sense of the numbers. Our firm was established over 90 years ago, and we've assisted countless companies with ownership transitions. Leaving your business is a process that takes time. So contact us today to discuss your situation. Visit our website at jakcpa.com. That's jakcpa.com.
Hello, Poised for Exit listeners. We are here today with Muthu Periakaruppan, CPA and president of MP Sales Tax. As I said in the show opener, we are going to be talking about sales and use tax, and not only how you might be able to recover a refund if that's your company, but also how it can be helpful for you as you prepare for an upcoming exit if that's you. So anyway, Muthu, welcome to Poised for Exit.
Oh, thank you so much, Julie. I really appreciate you having me on.
I'm so glad that you're here. This is a topic I can honestly say in the 5 years we've run this show that we've never covered. So this is very timely because many companies out there are not only preparing for exit, but are probably sitting on a refund that they've never tried to claim. And we're going to dive into that. But first, I would like to have you just share with us, how did you get here? How did you get into this specialty? I know you're a CPA. I said that in the beginning of the show, but it probably wasn't a straight line, as most aren't.
No, thanks, Julie. Yeah, there's very few people who can claim to have over 30 years of experience in sales and use tax. I started way back as a sales and use tax auditor at the state of Minnesota. I'd applied at the state, and that's the opening that came up. And then I had done that for 3 years. And then I left to join some, large accounting firms. And I went to work for a large retailer where I kind of helped build and lead large sales tax departments. I think where I found my true passion is when I went to go work for a firm that serves privately held clients. That's really where I found myself identify the passion for serving business owners and being a trusted advisor. And last year in the fall, my wife inspired me. She's an entrepreneur as well. And she inspired me to leave and go on my own, start my own practice so I could really focus on serving clients and letting the revenue take care of itself.
Fantastic. So how do you derive most of your business then?
So I have a lot of contacts that I've made over the last 30 years who work
Mm-hmm.
for, various businesses, and I've been reaching out and networking through them. I do have a non-compete with my old firm, so I've been
Mm-hmm.
careful to honor it, so which I really enjoyed because I really love getting out and networking and meeting people. So I've been attending various conferences, and then as I go to conferences, I meet two people, and they introduce me to four other people. And then
Sure.
certainly most CPA firms don't have somebody with my expertise. So
Right.
in I have a lot of people I've worked with over the years who've gone to other CPA firms who don't have a sales tax person. So they've been helping bring me into opportunities as well.
Well, and yeah, we were introduced by Kyla Hansen over at John A. Knutson and Company, and so that makes sense, right? So you guys can collaborate together, and I'm glad that she made the introduction here because this is a really good topic. Let's talk about sales and use tax and how that can become an issue in exit planning. Let's start with that.
Sure, most sales tax is always the overlooked tax. Everyone knows about income tax, but
Mm-hmm.
sales tax is the one that usually comes back, to bite businesses in a sales tax
Yeah.
audit.
Mm-hmm.
And sales tax is a trust tax, where if you're a seller, you collect the tax from your customer and then you pass it on to the state. But if,
Mm-hmm.
if you fail to identify where you are required to collect the tax from the customer and you fail to do so, if the seller gets audited, the seller ends up having to pay the tax and having to eat the tax, and they
Yeah.
can't always go back to the customer and get the money back from the customer.
Well, and many times maybe they wouldn't even be able to, right?
Right.
Yeah, I've had situations come up like that that have really made things complicated. So, how is it that you actually help the businesses to comply so they can avoid this altogether, especially if they've got a future due diligence in their, horizon?
Sure. Thanks, Julie. I love the section in your book where you talk about business owners needing to build a team of business advisors who are actually serving as trusted advisors, and you
Mm-hmm.
talk about the CPA, financial advisors, and attorneys. And within the CPAs, I serve a subset of sales tax, as
Mm,
most firms don't have my level of expertise. So what we do is we really try to understand the business model of how a business goes to market and how they bring in their sales. And that's what we call a nexus review. That's where we identify their sales tax footprint amongst the 50 states, the states where they should be collecting tax. And this has become much more pronounced after 2018 because of the Wayfair court case, where the
mm,
Wayfair court case determined that you don't have to have a physical presence in the state, where if you just have enough sales volume into a state, you could create nexus. And that's caught a lot of companies off guard. And states have been very aggressive in enforcing nexus now. And what
mm.
we do is we do the nexus review, identify where they should be taxed, where they should be collecting tax. It's very methodical. And then we research their trial balance to identify all their revenue streams. And we research the taxability of all their revenue streams, whether it's products or services, to determine what's taxable. And then we go back and look at it. We do a 4-year and 8-year review of their sales to determine what potential exposure that they have. And then we also review their exemption certificates that they collected from customers. That's like a problem because if a customer has gone out of business, you can't go back and get the exemption certificate from the customer. So what we do with the 4 and 8 year analysis is if a state comes in to audit a business and they haven't paid sales tax, they could go back indefinitely. Whereas what we try to
Mm.
do is if there's a huge amount of exposure, we would do a 4-year analysis and proactively contact the state with the voluntary disclosure agreement. So where we can limit the look back period to 4 years and then
Really?
get the interest waived. I'm sorry, get the penalty waived.
Sure.
So we can calculate the net benefit. But it's not a good idea to just register without knowing your exposure because then the state will say, well, you're just registered now. How far back should you have been registered? So
Mm.
it's not a good idea to do a register without understanding your past exposure.
Oh
But
my
then
gosh, yeah.
and then that sometimes we've seen $1 million, liabilities which they can't go back and get from their customer. And if you think about
My
one sale where
gosh,
you don't
yeah.
collect tax, and then that multiplies over 1,000 transactions.
No kidding. So the companies that would have these liabilities, typically what kind of companies are we talking about?
So surprisingly, we see this a lot with manufacturing firms
Mm.
because they're selling products all over the country.
Yeah, and they'd have
And
overpayments too then, right? Because you'd have on
yes,
the flip side, you'd
right.
have the same. Yeah,
The
okay.
same, right, exactly. And then a lot of manufacturers think what they're selling is not taxable in a state, but then they fail to collect an exemption certificate from their customer. And
Mm.
then if they get audited, it's hard to go back and get those exemptions. And now what we're seeing is there's a lot of like even agricultural sales, because if they sell one farm implement into a state, and it's costs over $100,000, they've all of a sudden established nexus in that state, and they have a separate business where they sell repair parts online. So now all of a sudden they have to register to start collecting tax on the repair parts, which they did not have to do before.
Mm.
And I think the Wayfair court case primarily was targeted for online sellers and online retailers and people who sell through Amazon or another hosted website. And those are the firms that the states are all going after to identify whether they are registered in a state when they're not. And
Mm.
surprisingly, there's other businesses too that you just wouldn't think of that are like life sciences or service providers or contractors, where they might have a person who entered a state to perform a service, but they also sell parts online. All of a sudden, they find that we have huge exposure with their parts sales online because they had a person enter the state to repair a piece of equipment.
Well, and you said trucking companies too.
Yeah, they create nexus everywhere.
Sure, of
Um,
course.
and then the trucking companies, on the flip side, we see significant overpayments for the trucking companies. And
Mm.
we love going into trucking companies and filing refunds because they're typically overpaid. And then what's unique in Minnesota is one of the only states where an internal fleet also qualifies for all the trucking exemptions.
Really, really. Well, I know someone who owns some trucking companies, so we might have to make sure he listens to this episode.
Yeah, that's for sure. I would love that.
Yeah. So, why, I'd like to know, are businesses not aware? Is it because their accounting firms haven't had a pulse on it, or what do you say?
Yeah, I would say most businesses are not afraid because they have accounting firms that are very strong in income tax,
Sure.
but they're not familiar with the sales tax issues.
Mm,
And they're typically like a local firm which has a local presence, but they
yeah.
haven't really had that multi-state exposure. And again, economic nexus with Wayfair case is so new that people just haven't been up to date on that. And most of the
Oh,
clients that we've worked on, where it was a surprise for them, they didn't realize that independent salespeople or an independent contractor could create nexus for them. And then if we find out they have an independent contractor working for them in 35 states, and they're
oh,
only registered in Minnesota and Wisconsin, so we find out they have
oh,
32 states where they have exposure.
wow.
And typically, what we find when we do work on deals and transactions, most of the buyers have a big four firm that's doing the due diligence. And the
Mm,
first tax type they go to is sales tax.
really?
And that's where we've seen a lot of deals either not happen or a significant discount occurred because of the sales tax exposure, because
Sure,
the buyer ends up inheriting all that exposure.
sure. Yeah, I was just wondering if you get hired by deal makers then.
Yeah,
To do the audit because I would think that certain industries for sure, especially M&A people that have been dealing in certain industries specifically would know, right?
right. I've been doing a lot of my networking
Uh-huh.
because a lot of these M&A firms may use a CPA firm, but they don't have somebody as proficient in sales tax as someone like me.
Hmm. Hmm. Well, and there's some firms out there too that kind of have a focus on manufacturing, right? One of the other companies that sponsors our show here, True North M&A, they're one of our show sponsors, have been for a long time, and they've got several people over there that are deal makers and advisors that specialize in manufacturing.
No, that would certainly be someone that would be great to know.
Yeah.
And those are the types of firms that are like perfect for this type of service that I provide. Because I can move quickly. If you
Hmm.
sometimes a smaller firm doesn't have a sales tax person, but if you go to a really large firm, either they have too much business or they can't move quick enough.
Yeah,
Whereas
right.
I can move with the speed of a smaller firm, but kind of bring the experience and knowledge from what I've had in the much larger firms.
Yeah, you got the best of both worlds there.
Yeah, thanks. That's why I feel
Yeah,
like I really hit my sweet spot when I moved to the firm where I was serving business owners. I
yeah,
think that's my true passion
definitely.
and feeling like I can make an impact on that business versus just somebody that they just hire some work out to.
Oh, yeah. Well, and just anytime that you can get any kind of a refund for a business owner, because so many of them just feel like they're taxed in so many different ways that, right? So let's
Right.
talk about that. Like, what is the
Sure.
process for being able to get a refund? And we can figure out how people can get a hold of you at the end of the show, but let's go down
Sure.
that road
Sure.
for a minute.
Sure, that's the part I love the most. And
Yeah,
my,
I bet
my
you do.
motto, it's
You
my
make people
motto.
smile.
Yes, I'm the auditor everybody loves.
For sure. Come on in,
Yeah,
Muthu. Would you like something to
yeah,
eat?
yeah. And I always bring in donuts or bagels when I start these projects too to let them know I'm the good guy.
Awesome.
um, so then, it's my motto is it's your money and we get it back. And
Mhm.
most states provide sales and use tax exemptions for various industries. The biggest would be manufacturing, but most people don't realize that there's exemptions also for the life science industry, some contractors, and in particular, my favorite is the trucking industry.
Mhm.
And most of these, business owners, they're focused on building a business and they're really good at it. And again, they have CPA firms who are focused on the audit and income tax. And I've worked in all 50 states, and I understand the exemptions. And we can aggressively interpret the statutes and recent court cases to find favorable opportunities for clients. So most people are aware the manufacturing exemption was an exemption on capital equipment that they use to manufacture a product or the repair parts and consumables. And in manufacturing, where we still find opportunities not on the fixed assets, but on the high volume, low dollar invoices, where accounts payable doesn't have the time to pay attention to the sales tax on an invoice,
Sure.
or they don't understand or they don't realize there's areas such as research and development or testing or quality control
Oh,
that
there you go.
qualifies, yeah, that qualifies manufacturing. So we could go, they may have 10 engineers in an
Sure.
office, but all the engineers' laptops and all their equipment also qualifies as R&D.
Wow. Okay. So even the equipment, I didn't realize that. That's
Yeah, yeah.
interesting. Yeah.
And then my favorite, the trucking companies. Most
Yes.
people don't pay sales tax on the tractors and trailers, but they may mistakenly pay sales tax on the lease. And also,
Mm.
we find the high volume invoices such as repair parts, trucks, the truck tires and windshields where they've overpaid the sales tax. So we can identify, we know where to look. When we have 10 drawers of accounts payables invoices, we know exactly which one to open and where we'll find the refunds. And then we compile the refund claim ourselves. Then we submit it to the state and then we respond to all the state's questions. We call it bird dogging. And once the state approves the refund, then they send a check to the client. That's my favorite part of my job is when the client gets the money. Then they pay us
Mhm.
a contingency fee after that. So nobody really pays us up front. So we have all the incentive to hunt and find those refunds.
Oh, I love that. Yeah, there's only upside then for the business owner, really, right?
Right, exactly.
Yeah. So when these checks come, are they like the size of a big desk so that you can stand, take a picture, and put it on social media?
Yeah, you're exactly right.
That's what you'll have to do, right? You could do that with
Yes,
AI.
yes, yes, you're right. And when I worked at some big firms, we got refunds in the millions, like, one, two, or $3 million.
Sure.
But
Yeah.
then those companies were so big, they were like kind of like, oh yeah, that's nice. But
Yeah.
when I went to work for serving privately held clients, like I got a refund check for $10,000 for a trucking company, and they
Yeah.
carried me around the office like I won the World Cup.
Wow.
And that's what I love is that
Yeah.
like $10,000 is a lot of money
That
for
would have been a
some
good
businesses.
video.
Yeah, and
It
I would.
is.
And I could easily go in to a manufacturing or life science firm, and I can easily
Yeah.
find 80 to 90,000 in refunds.
Wow. That is significant. It really
And that's
is.
yeah,
Yeah.
and that's money they didn't know that they had coming.
Yeah.
And when I go to your seminars, but when they're talking about M&A, the buyers say that we look at net working capital as one of the important factors, and
Mhm.
all I do is infuse cash
Exactly.
with no cost upfront.
Mhm. Incentive for everyone there.
Uh,
So, what are a couple of takeaways, like a couple things for business owners, whether they're in preparation for exit or not? Okay, so let's share a couple of tips for owners who are just in growth mode. Okay, some things
yeah,
that they can do to be proactive. And then your next tip will be for those who are maybe in the throes of due diligence or maybe not yet, but probably will be in the future, maybe in 2025. So, those two sectors, let's speak to them.
sure. No, I really love the fast-growing businesses. They're
Hmm.
really fun to work with,
Yeah.
and owners are visionaries, and they really know what they're doing, and they're really looking for trusted advisors who can help them do things the right way. And that's right. That's the environment which I really thrive in. For those fast-growing businesses, the Supreme Court put a target on their back with the Wayfair case, and that's why I didn't like that case. It put a target on my client's back because the big
Hmm.
companies they have systems in place that's already collecting all the right tax.
Right.
And if you're a business 5 million to 100 million, you don't already have a sales tax automated sales tax collection system. So
Sure.
I think it's really important to be proactive in making sure you do these nexus studies with your firm or someone like me to identify the states where you should be collecting sales tax. And as I say, as a best practice, always collect exemption certificates from your customer. Even if you don't know whether you need it or not, as a best practice, always collect exemption certificates. That's the first thing the states look at when they come in for the audit. And
Mm,
once you know which state you should be, collecting tax in, make sure you're researching and know what all your revenue streams are and what's taxable and what isn't. Because surprisingly, we're used to living in Minnesota where few services are taxable, but there are many other states such as South Dakota and Tennessee and New Mexico which tax a lot of services. So you need to also know
mm,
what services are taxable. And clothing's not taxable in Minnesota, but it is taxable in most other states. So you
right.
need to know what you're selling online is taxable. And then once you know what's taxable, you need to have a documented matrix. So whoever's in your accounts receivable, whoever's issuing bills knows what's taxable and you're collecting the tax. And then again, you need to make sure you have a process in place to collect and remit that tax because it's a trust tax, it's the state's money, and they don't look
Sure.
favorably on money that was collected that was never remitted to the state. And I
Sure.
think that's the hardest part for a lot of our clients is they don't have an automated system to know what the state sales tax is in every single taxing jurisdiction,
Yeah.
and nor do they know what's taxable in every state. So that's where, sometimes small businesses need to invest in an automated solution that can mitigate their risk. A lot of the buyers love it when a seller has an automated system for sales tax.
Yeah, I'm sure they do because, it kind of eliminates the possibility of a lot of error, right?
Right,
And
right.
yeah, having that clawback later. I was gonna ask too, I don't know, what in your industry and in what you're doing, do you see AI impacting the work that you're doing at all?
Yeah, especially on in reviewing invoices.
Yeah.
I think, right now I may go in and I may review several thousand invoices that are on paper,
Mhm.
but firms are now going to having electronic invoices for their receivables and their invoices. And right now, if they are, we have to go to their automated system and look at each invoice individually. Whereas with AI, we'll be able to have software that if we can get downloaded invoices or electronic invoices, the AI can review all the invoices for us, identify the which
Mhm.
ones we need to go in, and then look at for liability or refund.
Oh my gosh, saving you a lot of time.
Yeah, yeah, and
Mhm.
I have a lot of my fingernails. I have a lot of hangnail from like reviewing paper invoices.
Oh my
So I
gosh, yeah.
would love to not to have to review all the paper invoices.
Yeah, no kidding, no kidding. Yeah, I think it makes us, more efficient and, able to do more higher level things, right?
Right, right. And then
Yeah.
you can really focus your efforts on identifying opportunities and thinking strategically rather than doing the rote work and letting AI handle that part.
Yeah, I agree. Well, gosh, this has been great, Muthu. I really appreciate you being on the show and sharing your wisdom with us. And our audience, I'm sure, appreciates it too. So we'll have your contact information, obviously, in the show notes, like we always do. And for our listeners, thank you so much for joining us. And make sure that you share this episode with your colleagues and friends. And join us again next time. Thanks, Muthu.
Right. Thank you, Julie.